How's it going? Welcome back. It's Jonathan. Now in this video, I am breaking this video down into it's gonna be two different parts for two different audiences. Okay, so the first part I'm gonna be giving to you guys on YouTube. You're gonna be able to watch this whole video, etc. But halfway through, there's gonna be some topics that I can't show on YouTube, so it's gonna be for our member group in the back end. But just to save me some time, I'm gonna combine these videos into one, so I'll cut off at the end before I can actually go into the next section. Okay, so I want to start. I've been getting a lot of questions about AVAX USD's Avalanche. Now, I'll be honest, I don't know a lot about this crypto in the sense of what it does. That's not my main focus. I'm more on a technical and time and cycle. That's my angle when I approach the markets anyway, so from technical time and cycles. So a lot of people are asking about this, and you know, there was a very important low that occurred on the market around the 13th. Okay, that was a very important low. So we're going to use that low as the basis moving forward. We're going to do some technical analysis. I'm just going to give you the look and feel of how I go about my charts and how I set it up, so that way you can definitely, you know, take some clues out of what I do. That way you might be able to at least temporarily improve your forms of analysis. Now, the reason why I'm saying temporarily is because there might come a time that you outdo me in your analysis. You might be able to come up with a better theory, better way of doing things. So at least temporarily we'll boost you up, and then we'll take a look. So there's a few things we're going to be looking at. We're going to be taking a look at this run here, and then we're going to be taking a look at from this low to this high, and then all these lows to the current high. Okay, so Gann always said, and I'm going to reference him a lot because obviously a lot of the theories that I show you, a lot of theories that I teach you, they're not mine. I did not create them. When there's something that I found, I created, I'll let you know. But when I'm using something that someone else taught, whether it's Fibonacci, Gann, Elliott Waves from those guys, I will, you know, do the respectful thing and tell you that these are their theories. So Gann would always look at price ranges. Obviously, he'd look at time as well. He'd always look at price ranges, and he'd look at multiples of those ranges. And one thing that Gann always said was, you know, a lot of people go out to the market and they look for the top and the bottom, and they try to find the 38.2, the 50%, and you know, the 61.8% range, and they say, oh, well, from this low to this high, the market moved down X amount. Well, Gann went out and he said, you know, every single range is important because every range has been created in the market for a specific reason. You know, the past sets up the future. So it's one thing to look at this range here and be like, okay, well, that's a big range. But what are these ranges telling you? Because these ranges come in, these lows, these tops, they come into the market for a very specific reason. We want to know what the market's telling us in advance. So we'll use every single one, and that's something, and even ones like back here, they will tell us, you know, the future before it happens. So we need to look back to look forward, okay? So I'm going to start off, I'm going to try and keep this very simple for you. I'm going to start off with a price extension. I'm going to turn off my lock. We're going to start from a low. Now, I believe that maybe this here is a decent low. It looks like there's actually a low over here. We're going to start off with a low. We're going to move it up to the top. And then from there, we get our ranges, okay? So this is one range. This is an AB range. And what we've done is we've taken the AB range. We've taken it from the bottom. We've moved it up to the top. And from there, all we're doing here is we're now extending it 100% up. So we're just doubling it. The second range that we look at is an AB range with a C point. So if we take our same start and end point, so AB, and then we move it down to a C point, well, this is another range, okay? So all ranges are important, and we just need to try and find out, you know, what are these ranges telling us and how do we use them? Now, there's another thing that's important. First of all, whilst the ranges themselves are important, multiples of and divisions of and, you know, times of, so that's the multiple angle, multiples of and divisions of. So if we times, for example, 100%, or if we multiply it by 2, we're going to get 200%. And not only that, if we add ranges, so we'll add in that 200%. If we add ranges, for example, if we add the 100 and the 150 together, well, then we get another range. And if we add another range, you can do this continuously. So we want to add the 100 plus we want to add the 61.8. That's another range. So what we do is we take all these ranges and we can multiply them, divide them, add them up, subtract them, and we can come up with new ranges because they're all very important when it comes to market harmonics. So if we take, for example, this low to this high. Now, I've just brought up this chart. I've never looked at it before, so I'm just going to show you the way I look at the chart. And if we take this chart, low to high, and our ABC range, so our C being our extension point, and we take the 100% plus the 50%, add them together, that gives us approximately the top of the market at the moment. Now what happens if we do the same thing with this? So we add on, you know, more ranges. Now this is quite a large jump up here, so I'm not going to be able to, I don't think we're going to get anything from the 150% range. Let's add 150% on, let's add 200 on, let's add 250 on, and then we got, we could do like 238.2 as an example. So what we did is we added two times 100%, and then I added the 38.2% on there. Now what happens when we pull these out? Well, what we get is we get actually two areas where we need to be watching. Okay, so the first one is we get a cluster in price here, and the second one is we get a cluster in price here. Now both the 61% and the 150% came in at the same time as this high. It also vibrated into the future with this high here, and we can see that the market came into this range, fell away, pulled back into this range, fell away both times. So the past, my friends, sets up the future. So we're going to use the same methodology, and I don't want to, you know, crowd your brain, but I'm going to show you stuff. I'm always going to show you stuff that I don't think anyone else is going to show you. You know, a lot of people don't actually understand, but I've got a share trading program, and you can actually enroll in that, and you can go deep into the stuff that we teach. Now I'm going to be honest, it's not a cheap program, but I'm going to show you some of the stuff that a lot of people don't even know exists, don't even know how to use, and that's purely because, you know, I was taught the way to actually analyze the markets fully. So I put together everything that I've been learning over the last 10 years, and I have built it out into a program. So we do this ABC range, pull it out, we get another price cluster in here, and if we add on to this ABC range, let's go 138.2. I actually want to take a look at where the 125% range is, because again, 125% is just half of 50. Okay, so you see how that works? Dividing it, subtracting it, adding it, blah blah blah. And then what I'm going to do is I'm going to add on 200%. I'm going to add on 150%. I'm going to add on 175%. What else? That's it for that one. Alrighty, let's take a look at another range. What I'm actually going to be doing now is I'm looking forward in price, because I want to see where there is a potential for a market top in this market, and I want to see that market top way out into the future. All right, so there's that one there. Let's add on another one. Now your chart will get messy. It'll get messy from now, but once you've got your price ranges in, you got your clusters in, that is going to be the end of that messiness. Okie dokie. Every single range is important, so take the time to analyze every single range. All right, so let's move up and let's take a look at where some of these prices form a cluster. So what we have here, now this is not a perfect cluster. I teach the perfect cluster method in the course, so you can actually go in there and learn about how to get price clustering, but I'm just giving you a simplified version of how to get the clusters. You know, there's very specific percentage points that you want to be looking for. There's very specific amount of hits that you want to get. I'm giving you just a brief overview and I guess an introduction. But we could say, for example, that between 191 and 189 there's at least two prices that are coming together and they're clustering. Okay, we got another one at 174 and 175, and there's obviously a lot of clusters around this point here, so this could obviously be a potential double top in the future. But these are the areas we're looking at. So if I go ahead now and I get rid of this thing, and I get my rectangle. Where is my rectangle? Here. And I just put this in, and then I copy it, and I paste it here, and then I copy it again, and then I paste it here. No, I don't. Let's try again. Copy, paste. And then what I do is I pull this little tab out, and I go hide. See? Just hide it away. And if you don't do what I do, actually, we just hide the price extensions away. What we get instead is simple price targets and now a clean chart. So our direct overhead resistance is right around the previous all-time high. That means on the up move. Now I'm not looking at the down move. I'm not looking at, you know, where price could go down. I'm just saying if price continues to advance higher and there's no stalls and there's no new market data, so just based on what we know today, we could look for the market to just trend higher, you know, in its own fashion, and hit a top around here before possibly trending lower, and then trending higher, breaking above it, and then hitting another top or finding congestion around that top before it gets up to the next one. You've seen me use these in the Bitcoin chart. Now I go into more detail when I go through my Bitcoin chart, because I'm looking for areas where I'd be wanting to buy and sell, etc. So I mark them different colors and that sort of stuff. But just use this as an introduction into the way that you do price analysis, and from an angle that not a lot of people are going to show you. Okay, so this is the true way of doing price analysis, at least from the point of view of looking for potential clusters in price to move up. This is the true way. So with that said, I'm going to wrap this up. You can take notes of these prices if you're in this market and just see how it plays out. I'm not going to save it. I'll refer to this in another video. Okay, let's go ahead and close it off and just head over to our Bitcoin market. All right, so let's move on and let's take a look at the price action that occurred around our last forecasted date. Now, if you are a regular here, you'll know that for a very long time, I had a projected sell date on the Bitcoin market of around December 21, okay? Now that was based on all this market action back here and the potential of an eventual rally into December, which I got wrong. But a true market analyst or someone who truly understands the market will know of a term called polarity flips, okay? Now, when you get a polarity flip, so let me write it in so I can stay here. When we get a polarity flip, all it means is, so when it comes to market forecasting, price analysis, etc., when it is given in terms of time and cycles, there is, so let's say for example we have a target date here, and we're looking for a market top because we're looking at this eventual rally higher into a market top. So we've pinpointed this date as the potential one for market top, and then like it did in the past where we had September 21 as the market bottom, I was looking for potential decline into September, especially towards the end before its eventual next rally. Okay, so if the market didn't top out here and the market continued to rally higher into the 21st of September, then that would have been a polarity flip where the market, instead of turning down, actually went higher. So the date itself worked, the date changed the market trend, but the polarity or the angle, so instead of the move up, the market moved down, the angle was actually flipped. Okay, so anyone who delves into Gann analysis and tries to understand the markets from a forecasting view, they will throw out the analysis and research if they don't understand polarity flips. Okay, so polarity flips is very important to understand. It doesn't mean that the forecast was wrong. It just means that the polarity of that forecast was incorrect. Now, Gann picked up on this early on, and he spoke about it. And when he started to draw his forecasts into the years in advance back in the 30s and 40s, he would then discuss the potential polarity flips in his forecast and what it would mean for the market if the market did flip. So my sell date for Bitcoin on the 21st ended up becoming a buy date, and that here occurred around the 20th, and I was then now moving back into the market in this run here. So a lot of this price point here was where I was moving back into the market, and at the moment we're looking at potential top on the 23rd, so we'll see what happens here, where the market could push up into this price box, which is, again, go back to the last video on how I calculate these price boxes. They're important, and they're all important because what happened in the past tells us what is going to happen, or at least areas that we should be watching in the future. It doesn't guarantee it, but it gives us, the accuracy of these things is insane, and I would encourage you to just do everything you can to try and learn about them. So we could get a potential top on the 23rd, maybe down into 25th, I don't know, we'll see how it goes. But the flip here that occurred actually changes the dynamic for the year moving forward. And I'm going to save that for the advanced guys, the guys who are in the back end. So what I'm going to do is I'm going to switch over to some other charts, and we'll come back to this one soon, and I'll give my thoughts on the year ahead. So taking a look at the squares, what we'll do is we'll zoom a bit in, get it a bit further. I'll just clean up the chart, get rid of all this. Okay. So what we're going to do is I'm going to start putting on the 45-degree angle again, just so that we can continue to monitor the squares moving forward. So if I can right-click this one. Alrighty, so the 45-degree angle's on here again. Now you'll notice that in the price point over here, I didn't highlight any congestion area in price here based on price analysis. And if we head over to the squares, you'll understand here that even though I didn't get to highlight anything, the 45-degree angle provided the support that we were waiting for. So these angles, which is actually, I call it from the square of 9, but it's actually from W.D. Gann's, the octagon chart. W.D. Gann taught this when he was octagon forms of analysis. And I just refer to it now as the square of 9. That's just the natural chart that everyone calls it these days, so why not just keep with the trend? But if you want to go deeper into the research, then it's best to continue to educate yourself and understand the true meanings behind these things, so that way you can fully understand it. So obviously this one here is quite dramatic. We got a exact hit. It could have hit anywhere. It could have hit down here, could have hit this low here. All these guys that come out with their price support and analysis, why did it hit this green line exactly? Why did it hit that one? Well, these are natural market harmonics. Okay, this is stuff that people don't teach you because they don't understand. This is natural. This occurred in the market. So these squares occur in the market long before you even know they exist. And that is the beauty of the markets, where the market will move in and out of these points before you even know that they exist. So I'm going to put on another revolution if I can, because I want to start looking up again. And I want to see where the next price points are if the market is going to continue its run higher, where they might hit congestion. So I'm favoring, there's some people that are coming out now saying that this run down is going to result in another run down. Now this is a dead cat bounce. Now it could be. I'm not saying it is. I'm not saying it's not. To find the answers to those questions, what you need to do is you need to do price analysis, exactly what we did on AVAX. And we need to start doing price analysis from the move up now, and we need to find out where it's congesting to the move higher, so that way we can pinpoint areas in price that the market may hit a top before it moves down. That is what's important. But if you're looking for the bull case, then what you do is you move the market from low to high, and then you find areas that it might find support. Okay, so those are the two things you need to build out. You need to build out price clustering for the resistance, which is going to be above where the price is now for the resistance based on the down move. And then from the bottoms to tops, you need to start building your case for both support for where it is now, and also resistance to the top, so that way you can move in and out of these and see how the market's going to react. Okay, that's important. I try to just teach you or show you the basic stuff. You know, I've got a fully fledged course out there that will teach you everything, that'll show you the stuff that you really need to know. All you need to do is just commit to doing it. That's as simple as that. So here we are here. I think that this date is very significant. I think that this date, this potential 23rd might be a top potential. We could run down into the 25th, and then we'd be looking around the 28th to round out the rest of the month for December, and then that puts us in 2022 territory. Okay, so this square of 9, the 45-degree angle hitting on the 20th, the market moving up, for me is a sign of relief, because over here, you know, I was a bit cautious as the market moved down. I did buy into this rally. I was a bit cautious, but now I'm starting to get a sigh of relief, and we just need to make sure that the market starts to move above any specific resistance levels that it may have for the next run higher. But that's trading on hope. So what you need to do, and I can't do it for you today because this video is going to be way too long, is I need you to start doing the exact same method I taught you for Avalanche, and I need you to go from top to bottom, and then from top to bottom I want you to then start building out the resistance levels and starting to see where the market may hit tops, and then building a case for the bear side. Because once you've got your bear side case, then what you do is you build your bull side, and then you know how to move in and out of the market if the market was to do a specific thing, or one over another, for example. So for those of you who are watching this on YouTube, thank you for sticking around, and I really hope that you got some new information. I'm now going to switch over to the content for the other guys. So if you want to join the group, if you want to know sort of what we're talking about behind the closed doors, etc., you know, we do have a private group, and you can join that. The link is going to be in the top comment and also in the description of this video. And for the other guys, you know, welcome to stay on board. So for the guys on YouTube, thank you. Comment below, hit the like button, hit the subscribe button, and I'll talk to you next week. Merry Christmas.